I do want to talk to you about one more topic, which is the tax treatment on non-resident Indians. And there are a few question marks about this, especially if you're selling shares or mutual fund units. And my colleague, Mahima Vaccharajani, has this report.
Right, so in terms of NRI taxation, let's first understand as to who an NRI is. A person who is staying in India for less than 183 days will be considered as an NRI, or a person who has stayed in India for less than 60 days or less than 365 or more days in the last 4 previous years. Now, in terms of how these capital gain taxes arise, any capital gain on transfer of a capital asset situated in India will be taxable, plus any income that the person makes from selling or buying the property which is situated in India will be taxable. Of course, capital gains on investments like shares, mutual funds, securities will also be taxable in India. In terms of debt funds, well, I've divided the entire capital gain tax into 3 different categories. The first one is debt funds and other capital assets, where long-term capital gain is considered where the security is held for more than 24 months. Here, the tax rate will be 12.5% if the amount exceeds 1.25 lakh. For short-term capital gain, of course, if the security is held for less than 24 months, the overall income will be integrated in the individual's taxable income and will be taxed at the slab rate. For capital gain tax on shares as well as equity mutual funds, long-term capital gain will arise if the security is held for more than 12 months. Tax rate again will be at 12.5% if the overall tax exceeds around 1.25 lakh rupees. And a 10% TDS is also applicable in this case. In terms of short-term capital gain, it will be considered as a short-term capital asset if it is held for less than 12 months. And here the short-term capital gain is taxed at 20% plus a TDS of 20%. Lastly, in terms of sale of property, in terms of long-term capital gain, a flat 12.5% rate will be applicable without indexation. But for immovable properties, before 23rd of July 2024, taxpayers have an option either to pay tax at 12.5% without indexation or at 20% with indexation. In terms of short-term capital gain tax with respect to where properties are concerned, it depends on security transaction tax. If STT isn't applicable, tax is applicable at normal rates. But if security transaction tax is applicable, it will be paid at a rate of 20%. Now, how can an NRI save long-term capital gain tax arising on his particular sale of property or income arising like that? In terms of this, there are 3 different sections available in income tax. Section 54 applies to long-term capital gain for NRI from sale of residential property. They can reinvest the overall long-term capital gain amount in another residential property in 3 years or construct a new property use amount of that LTCG overall. The next is Section 54 EC, which applies to long-term capital gain from sale of land or building or both. Here, they can invest in specified tax-saving bonds such as REC or NHI bonds within 6 months of that tax long-term capital gain tax arising. The last one is Section 54F, which applies to long-term capital gain from the sale of any asset other than residential property. Here, you can reinvest the overall long-term capital gain amount in another residential property within 2 years or build a property in the next 3 years.